Hey everybody, I'm Sean Ryan, partner and co-founder of R2 Accounting, and this is our 2 cents. On this video and podcast series, the purpose is to get information and experiences to small and medium-sized business owners to help give them some guidance. And these might be experiences that we've come across or those that our customers and peers have come across as well. If you find this informative, feel free to like and subscribe below to get future content updates, and also feel free to leave a comment in the comments section. So with all that said, let's get going. Okay, so today we're going to launch into the fourth and final part in our series on understanding the financial health of your business. If you haven't watched the last 3 episodes, I urge you to do so. This is the one that's really going to bring it all together. What we're going to talk about today is the 3 pillars of understanding the financial health of your business, and those are made up of the importance of quality bookkeeping, the importance of operational and financial results analysis, and the importance of cash flow forecasting. So true understanding of your financial health comes from actively engaging in all 3 of these. And what we're going to talk about today is why that's important and actually how they all relate to each other. Okay, so when we talk about how the pillars are related to each other, the first thing we need to understand is that some pillars are dependent on others. And what I mean by that is you need to handle one before the other ones will make sense. So as an example, quality bookkeeping is really the foundation for all 3. That bookkeeping serves as the data. It's the data that's going into all the results and the cash flows and all those processes that we're going to do after. But if we're not working with quality data, when we do our results analysis, we might be looking at trends or results that are frankly just misleading. We need to have that good foundation to make sure that the choices we're going to make and the strategies we employ from that analysis make sense. Similarly, on operational and financial results analysis, that really serves as the foundation for cash flow forecasting. How well are we doing that analysis, the cash flow or the operation and financial results analysis? If we're only maybe looking at 1 month, say we made $10,000 in 1 month net income, and we just make a simple assumption and say, well, we make $10,000 a month, that's easy to forecast. You know, if we had maybe looked at the 5 months previous to that, we might have realized that no, we usually only actually make about $3,000 a month. We just happen to have a really good month this one time. You need to really have a handle on that trend and the amount of analysis you're doing on the results side before you can really put faith in the cash flow forecasting side. So there is an aspect of this where one comes before the other. You need to start with the quality bookkeeping, do a solid results analysis, and if you have both of those, the cash flow forecasting function that you perform will be of high quality as well. So not only are some pillars dependent on others, we're kind of using 2 analogies here, but the reality is each pillar actually supports the other as well. You know, these 3 pillars are kind of like the legs on a table. If all are functioning and well maintained, the table stands up. But the second that one isn't functioning properly, it obviously falls over. Simple analogy. And when we look at this, let's just talk about the first, bookkeeping. We kind of alluded to this in the last one. You know, it's serving as the data for the other 2. That data is the foundation. It is supporting the results in the cash flow analysis. But if you think about operational and financial results analysis, you know, not only is it generating reports based on that data, but it's actually also serving as a check on the quality of the bookkeeping. You know, when we start going through our results analysis, if we just happen to notice that our dues and subscriptions account happens to be, you know, twice as high as it's been for the last 4 months, that might trigger something. We might say, well, I'm going to look into what's going into that account, because did we actually spend double, or is something else going on here? You might find that actually something just got booked incorrectly, and we need to go back to the bookkeeping stage and actually fix that journal entry to put that cost in the right spot. You know, it's helping us make sure that when we are doing that analysis, the analysis again is making sense. The numbers are where they need to be, and we're getting that full understanding of what really happened. You know, on the cash flow side, again, what we're doing with cash flow forecasting is we're building expectations for what we hope or what we should be seeing in our results. But in conjunction with the results analysis, it's also formulating the way that we look at our company. And what I mean by that is, in a previous episode, we talked about, maybe a company might have a number of different divisions. Doing that analysis might allow us to see, oh yeah, we should actually be looking at these couple pieces separately. And when we do that, we actually have the ability to go back to the bookkeeping stage and say, well, if we're going to look at these separately, independently, when we're doing our bookkeeping, we have the ability to add tags and other identifiers to denote transactions as part of a business division. And when you do that, you're really just allowing yourself to run more meaningful reports, more informative reports that will be usable at the operational and financial results analysis stage. So the cash flow forecasting and the results analysis is kind of impacting our bookkeeping, how we actually go about doing that function. And these are just a couple examples, but you can really see when you start to do all three regularly, each is supporting each other, and as you do it regularly, they're going to get better and better as time goes on, leaving with you with a better understanding overall. So the last thing I want to talk about in this section is that regarding these three pillars, ongoing maintenance is key. The more regularly that you do this, the more frequently that you do this, the better understanding you're going to have. And in some aspects, it's not even about enhancing your understanding. There almost is a minimum level of maintenance required to these pillars. And let's start with bookkeeping. That's actually the most integral one. So bookkeeping isn't just required for understanding, it's actually required for tax compliance. Maybe you get an audit done, financial statements. We've talked about these in the other episodes, so I won't rehash them here. But the more regularly you do this, the less of a job it actually becomes. I know it might seem hard to sit down every day and go through the bookkeeping, but depending on how many transactions your business has, it can get out of hand quite quickly. So let's say you have 10 transactions a day. If you're sitting down every day at some point and just booking those 10 transactions and being done with it, it might take a few minutes of your time, but it's a short amount of time, so you can focus on it, you can get it done very well. If you wait till the end of the month to handle the culmination of 10 transactions a day, now you're looking at 300 transactions, which you maybe need to handle all at once. And if you're the one doing it, you're operating a business, you might not have time that day to spend that amount of time to dedicate to bookkeeping. So now you're trying to do it quickly, and the result is going to be a less than quality product, I'm sure. A little more extreme example, actually this isn't extreme, I've seen it. We talked about 1 month, but if you leave it for 3 months or a year, I have actually talked to people that have left their bookkeeping for 2 years and they haven't done any tax filing and they are in a panic. And when you get to that point, just trust me, you don't want to be there. You're definitely losing sleep. So the more frequently you do that, the better. Operational and financial results analysis, is this something you need to do every month? I'll be honest, I would say depending on your business, maybe you don't. I recommend it. I recommend the bookkeeping, the results analysis, and the cash flow forecasting be done every month without fail. If there wasn't a huge change that month and you don't need to do a whole lot of analysis from the prior month, that's okay. But at least you've done it. You're doing the analysis and you're giving yourself the chance to spot issues or changes if they come up. A lot of companies might do quarterly, and for results analysis, I would suggest no less than a quarterly basis. You look at those results, and moving over to cash flows, that cash flow forecasting, you might be able to get away with, hey, let's do it once a year and let's see what the next year is going to look like, and that's fine. But if you're going to do that, I really would suggest taking some time to think, in the last 6 months, 8 months, has anything changed in my business that might force me to change how I look at some of these assumptions going forward? It's fine to say, oh, nothing has changed, let's just move on. But if you're halfway through the year and there's been significant change, you're going to want to redo that cash flow forecast, because you might be measuring to an expectation that just isn't really realistic anymore. So again, the more frequently you do all three of these, the better understanding you're going to have. Let's use a different analogy, keeping the theme of using different analogies for everything. This is really kind of like operating a vehicle. It might cost you a little bit of time and money maybe to do it regularly, but you're really going to be saving yourself massive cost and massive headache later. And again, the more you do it, just cushioning the damage control there, you're really going to have a better understanding, and that's actually going to help you further your growth, which is what we're really trying to do here. Okay, so to wrap up, as always, when is the best time to start all of this? And as always, the answer is right now, as soon as you can. If you're a small or medium-sized business owner, but maybe you don't have a finance background, this might be something that can seem pretty daunting. What I'd recommend doing is don't try and tackle all these at once. And what I mean by that is, don't try and get your bookkeeping caught up, your results analysis and your cash flow forecasting all put together at the same time. What'll happen is it'll probably start to seem a little insurmountable. You'll probably fumble through it. It'll take a ton of time, and you might actually end up giving up on it in the end. What I would suggest is try and tackle the project in the order of that the pillars support each other. So, start with your bookkeeping. Get a really good cadence and foundation there, regular routine for how you're booking those transactions, and just get comfortable with it. And once you have that, you can move over to the operational and financial reporting analysis. Take that data, run some reports, get comfortable with how often you're doing it, and what you're looking at. And when you have that, you can start to do some cash flow forecasting. And then after you've got all three of those together, the next step is to obviously refine it. Keep doing it. Do that maintenance, keep performing those tasks. And once you keep doing that, once you keep refining it and continually doing it, you're going to be amazed at how much better your business functions, how much more efficient it is. But mainly, you're really going to start to implement those strategies and have those specific action items that are going to let you change your business to let it grow properly. And once you have that, that's really when you're going to start to see those increased profits. That's the point of all of this, is how do I grow? That's when that's going to all come together. Again, you're a business owner and you're doing what you're doing because you're passionate about it. If you're having trouble getting started, feel free to contact us. We do this because we are passionate about this. If it's just a couple questions to get you going, or if you think you need help, we're always here. Just feel free to reach out. Okay, everybody, thanks for watching. If you found this useful today, please leave a comment in the comments section below, and also feel free to like and subscribe to get updates for future content. If you want to get a hold of us directly, you can do that at info@r2accounting.com, or feel free to head over to our website, r2accounting.com. Again, I'm Sean Ryan. Thanks for watching R2 Cents with R2 Accounting.